terms of the index fund, I would just take a very broad index. I would take the S&P 500 as long as I wasn't putting all my money in at one time.
Did you know that Warren Buffett, one of the world's wealthiest and most successful investors, once bet $1 million that an S&P 500 index fund would outperform a collection of hedge funds over a decade? And he won. This bet wasn't just a gamble. It was a powerful statement about the efficiency and potential of index funds. Today, we're diving into the world of index funds, guided by none other than Warren Buffett himself. We'll explore the 5 index funds that he considers ideal for beginner investors. So, if you're looking to start your investment journey, you're in the right place. Before we dive into the specific funds, it's crucial to understand what makes an index fund a Buffett pick. Warren Buffett, known for his wise investment advice and remarkable success in the stock market, has always emphasized the importance of choosing the right index funds. Let's delve deeper into the criteria that make an index fund a Buffett pick. Factor number 1, low expense ratios.
If I were going to put money into a index fund in relatively equal amounts over a 20 or 30-year period, I would pick a fund, and I know Vanguard has very low costs. I'm sure there are a whole bunch of others that do. I just haven't looked at the field. But I would be very careful about the costs involved.
Buffett has consistently warned against funds with high fees. He argues that these costs can significantly reduce an investor's net return over time. In his 2016 letter to Berkshire Hathaway shareholders, Buffett pointed out that the high-cost funds eat into the investor's capital, citing that, in many cases, the aggregate expense ratio plus brokerage fees will reach annual levels of 2% or more. He believes that this is detrimental to investors, especially when compounded over many years. The impact of these fees is not just theoretical, it's a significant drain on potential earnings. Buffett's preference for low-cost index funds is rooted in this understanding. He often points to Vanguard funds as an example, known for their exceptionally low expense ratios. These funds allow investors to keep a larger portion of their investment returns, aligning perfectly with Buffett's cost-conscious investment philosophy.
Because all they're doing for you is buying that index. I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs attached to them.
Number 2, broad market exposure. Diversification is a cornerstone of Buffett's investment strategy. He advises investors to choose funds that offer broad exposure to the market. This approach reduces the risk associated with individual stocks or sectors. Buffett's rationale is that by owning a wide cross-section of businesses, investors can benefit from the growth of the economy as a whole, while mitigating the risks inherent in individual companies. In his 2013 letter to shareholders, Buffett praised the S&P 500 index for offering what he called a cross-section of American industry. He believes that such funds are a more sensible investment for most people than trying to pick individual stocks. This strategy is not about outsmarting the market. It's about being smart enough to avoid the costly mistake of trying to do so. By investing in a broad market index fund, investors can ride the general upward trend of the economy over time, which is a key aspect of Buffett's investment philosophy. Factor number 3, long-term investment potential. Buffett's investment strategy is famously focused on the long term. He often emphasizes the importance of having long-term perspective when investing in the stock market. Buffett believes in the enduring value of good businesses and advises investors to select funds that have the potential to perform well over decades, not just years. This long-term approach is based on the idea that while the market can be unpredictable in the short term, it has historically trended upwards over the long term. In his 2014 letter to shareholders, Buffett advised investors to keep buying it through thick and thin, and especially through thin. The underlying principle here is that time in the market is more important than timing the market. By choosing funds with long-term growth potential, investors can benefit from the power of compounding, which Buffett often refers to as the eighth wonder of the world. This approach requires patience and discipline, qualities that Buffett himself has exemplified throughout his investment career. In short, when selecting an index fund, following Buffett's criteria of low expense ratios, broad market exposure, and long-term investment potential is key. These principles are not just theoretical, they are the foundation in Buffett's own investment success. By adhering to these criteria, investors can align their strategies with one of the greatest investors of our time, positioning themselves for long-term financial success. Now, with these criteria in mind, let's look at the 5 index funds that meet Buffett's standards. Number 1. The Vanguard SP 500 ETF. The Vanguard SP 500 ETF, known as VOO, stands as a prime example of Warren Buffett's investment philosophy. This fund epitomizes the essence of what Buffett has long advocated for: investing in a broad, diversified portfolio of U.S. companies with a long-term perspective, and doing so at minimal cost. VOO tracks the S&P 500 index, which is composed of 500 of the largest companies in the United States, representing various industries. This index is widely regarded as the single best gauge of large-cap U.S. equities. By investing in VOO, an investor essentially buys a piece of these top 500 companies, including tech giants, healthcare leaders, financial institutions, and consumer product innovators. This diversification is a key strength, as it reduces the risk associated with individual stock investments and provides exposure to the broader U.S. economy. One of the most compelling features of VOO is its incredibly low expense ratio. In January 2022, the expense ratio stood at a mere 0.03%. This means that for every $10,000 invested, the cost is just $3 per year. Buffett has consistently criticized the high fees charged by many investment funds, arguing that these costs can significantly eat into an investor's returns over time. VOO's low expense ratio aligns perfectly with Buffett's philosophy of cost-efficient investing. Moreover, the S&P 500 has a storied history of robust performance over the long term, aligning with Buffett's emphasis on long-term investment. While the market can be volatile in short term, the S&P 500 has historically provided solid returns over longer periods. This makes VOO an attractive option for investors who, like Buffett, are in it for the long haul. Buffett's endorsement of the S&P 500 Index Fund is not just theoretical. In his 2013 letter to Berkshire Hathaway shareholders, he famously instructed the trustee of his estate to invest 90% of his wealth into an S&P 500 index fund for his wife's benefit after his passing. This personal directive demonstrates his belief in the fund's suitability for the long-term, value-driven investing. In essence, the Vanguard S&P 500 ETF is more than just an investment vehicle. It's a manifestation of Buffett's investment wisdom. Its alignment with his principles of low costs, broad market exposure, and long-term growth potential make it a top choice for investors seeking to emulate Buffett's successful approach. Number 2. The Vanguard Total Stock Market Index Fund. The Vanguard Total Stock Market Index Fund, or VTSAX, is another embodiment of Warren Buffett's investment principles, offering a comprehensive exposure to the U.S. stock market. This fund is designed for investors who seek a single fund that provides a diversified blend of small, mid, and large cap growth and value stocks, encompassing the entire U.S. equity market. One of the key attributes of VTSAX that aligns with Buffett's philosophy is its broad diversification. By investing in this fund, one gains exposure to over 3,000 stocks across every sector and size. This extensive diversification mitigates the risks associated with individual stocks or specific sectors, spreading the investment across the entire market. This approach is in line with Buffett's advice to be diversified and not put all eggs in one basket. VTSAX's low expense ratio is another aspect that resonates with Buffett's strategy. In January 2022, the fund's expense ratio was remarkably low, standing at 0.04%. This low cost ensures that investors keep more of their returns, a fundamental aspect of Buffett's investment advice. He has often criticized funds with high fees for eroding the investor's potential earnings, making VTSAX's cost efficiency a significant advantage. Furthermore, VTSAX offers the benefit of owning the entire U.S. stock market, which aligns with Buffett's belief in the American economy's long-term potential. The fund's composition reflects the performance of the overall market, making it an excellent choice for investors who share Buffett's long-term bullish outlook on the U.S. economy. In summary, the Vanguard Total Stock Market Index Fund is an exemplary choice for investors who value Buffett's principles of diversification, low costs, and long-term investment. Its comprehensive market coverage and cost efficiency make it a robust foundation for building a diversified investment portfolio, in line with the wisdom of one of the world's most successful investors. Number 3. The Vanguard 500 Index Fund. The Vanguard 500 Index Fund, or VFIAX, is another prime example of an investment vehicle that aligns closely with Warren Buffett's investment philosophy. This fund tracks the S&P 500 index, which is a benchmark for large-cap U.S. stocks, and includes 500 of the largest companies in the United States, spanning various industries. VFIAX offers investors a straightforward, effective way to gain exposure to these major companies, embodying Buffett's preference for simplicity and efficiency in investing. One of the most significant aspects of VFIAX that resonates with Buffett's approach is its focus on the S&P 500 index. Buffett has long been an advocate of investing in the S&P 500 as a way to participate in the growth of the American economy. He believes in the power of American businesses over time and suggests that a low-cost S&P 500 index fund is a robust vehicle for growth. VFIAX provides this exposure, allowing investors to benefit from the collective performance of America's leading companies. Another key feature of VFIAX is its low expense ratio. In January 2022, VFIAX had an expense ratio of only 0.04%. This low cost is crucial to Buffett's investment strategy, as he emphasizes the importance of minimizing fees to maximize returns. High management fees can significantly reduce an investor's net returns over time, and VFIAX's low fees align with Buffett's principle of cost-effective investing. Additionally, VFIAX's approach to investment is in line with Buffett's long-term perspective. The fund is designed for investors who believe in the long-term potential of the U.S. stock market and are willing to ride out the short-term market fluctuations. This aligns with Buffett's philosophy of buy and hold, where he advocates for holding investments over an extended period to benefit from the market's overall upward trajectory. Number 4. The Vanguard Short-Term Treasury Fund. The Vanguard Short-Term Treasury Fund, or VFISX, represents a slightly different aspect of Warren Buffett's investment philosophy, focusing on the security and stability of short-term U.S. government bonds. While Buffett is predominantly known for his stock investments, he also appreciates the value of having a portion of one's portfolio in more conservative, lower-risk securities, especially as a counterbalance to stock market volatility. VFISX invests in U.S. Treasury bonds with short-term maturities, typically less than 3 years. This focus on short-term government debt makes the fund less sensitive to interest rate changes compared to longer-term bond investments, offering a more stable investment option. This stability is particularly appealing during periods of market uncertainty or volatility, providing a safe haven for investors. A key aspect of VFISX that aligns with Buffett's principles is its low expense ratio. Keeping costs low is a central tenet of Buffett's investment strategy, as he believes that minimizing fees is crucial for maximizing your long-term returns. In January 2022, VFISX had an expense ratio of only 0.20%, which is relatively low for a bond fund. This cost efficiency is in line with Buffett's preference for investments that do not erode returns through high fees. Moreover, Buffett has often emphasized the importance of understanding one's risk tolerance and investing accordingly. VFISX offers a conservative investment option for those who are risk-averse, or for those looking to diversify their portfolio with lower risk assets. This aligns with Buffett's advice to not put all of your eggs in one basket and to have a balanced investment approach. In simpler terms, the Vanguard short-term Treasury fund may not be the typical investment one associates with Warren Buffett, but it embodies his principles of cost efficiency, risk management, and portfolio diversification. It's an excellent choice for investors seeking a stable, low-risk component in their portfolio, reflecting Buffett's broader investment wisdom that values both growth and security. Number 5. The Vanguard Total International Stock Index Fund. The Vanguard Total International Stock Index Fund, or VTIAX, shows that Warren Buffett knows how important it is for an investment portfolio to have stocks from around the world. While Buffett is often associated with his investments in American companies, he acknowledges the value of having exposure to international markets. VTIAX offers investors a comprehensive way to invest in a wide range of non-U.S. equities, encompassing developed and emerging markets worldwide. VTIAX's broad international exposure is a key aspect that aligns with Buffett's investment philosophy. The fund includes stocks from Europe, the Pacific region, and emerging markets, providing a diversified blend across various countries and industries. This global diversification helps mitigate the risk associated with being overly concentrated in any single country or region. Buffett understands that the global economy is interconnected, and by investing internationally, one can capitalize on growth opportunities outside the U.S. Another important feature of VTIAX is its low expense ratio. In January 2022, the fund had an expense ratio of 0.11%, which is quite low for an international fund. This aligns with Buffett's principle of minimizing investment costs to maximize returns. Buffett has consistently emphasized the impact of fees on investment performance, and VTIAX's cost efficiency makes it an attractive option for cost-conscious investors. Furthermore, VTIAX aligns with Buffett's long-term investment approach. Investing internationally can be more volatile in the short term, but over the long term, it can provide substantial growth opportunities. Buffett advises investors to have a long-term perspective, and VTIAX is suitable for those looking to diversify their portfolio globally with a long-term horizon. In conclusion, the Vanguard Total International Stock Index Fund is an excellent choice for investors who wish to follow Buffett's advice of global diversification, cost efficiency, and long-term investing. It offers a practical way to gain exposure to international markets, complementing investments in U.S. equities and broadening the investor's portfolio in line with Buffett's broader investment wisdom. Warren Buffett's investment philosophy is about more than just picking stocks. It's about adopting a mindset. By investing in these index funds, you're not just putting your money into the market. You're embracing a proven, long-term approach to wealth building. Remember, as Buffett says, time is the friend of a wonderful business, the enemy of the mediocre. Start your investment journey with these principles, and you're well on your way to financial success.